My target on gold, was 5,000. That's where but I think that may prove conservative. I raised my target back in early October in my fourth quarter letter on silver. I raised that to $100 from 75. And I'm pretty confident we're going to see that in the next, several months. I think we're probably off to the races here. I think, it's not that it'll be up every day or that it's going to be straight up without any more pullbacks, but I think between now and the end of the year, you could have a very strong rally. The next cycle, those could go on to major new highs. So, I'm calling for gold to go to 20,000. I'm calling for silver to go to 500.
As November 2025 unfolds with gold hovering around $4,050 per ounce after touching $4,400 highs and silver near $50 per ounce amid turbulent pullbacks, a seismic shift is underway. Central banks are hoarding gold at unprecedented rates despite record prices, while Russia just became the first major power to officially add silver to its strategic reserves in a bold de-dollarization play. With emerging markets like Poland, Kazakhstan, and Brazil leading the charge, adding hundreds of tons this year alone, and the Fed signaling ample liquidity bond buying from December, precious metals are flashing structural bull signals that dwarf past cycles. In this explosive rough-cut interview, renowned contrarian strategist DavidHunter, famous for nailing the 2022 bottom and ongoing secular bull, declares, "We're off to the races in both stocks and metals." He raises his targets dramatically, gold to $20,000 and silver to $500 in the next inflationary cycle after a coming global bust, with miners set for their biggest leg up in the next 6 to 12 months. Hunter sees the current 43-year stock bull melting up to S&P 9,500 plus 40% from here, before a historic top as early as Q1 2026, but warns precious metals will shine brightest through the chaos ahead. Let's watch clips from DavidHunter's explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
Yeah, I think obviously we've had in the last few weeks this pullback, and it's kind of the pause that refreshes. We've seen them before. Obviously, we had a bigger one back in April. This is more of a truly a pause that refreshes. It gets everybody concerned. Everybody's talking about the bubble in AI and whether the market has topped and whether trouble ahead. And basically, you've rebuilt the wall of worry. I think there's always a possibility of going lower, but I think we may have seen the lows of this pullback. The S&P pulled back about 5% almost precisely. And I think we're probably off to the races here. I think, it's not that it'll be up every day or that it's going to be straight up without any more pullbacks, but I think between now and the end of the year, you could have a very strong rally. Certainly between now and Thanksgiving is a traditional seasonal strength time. And I think we're going to see that here. Everything to me looks as it has, ever since the last time we talked. We're moving to new highs. Every time we get a little bit of a sell-off, people start, jumping back out saying, oh, the top is in. It just tells you still have, surprisingly, as far as this market has come, you still have sentiment pretty much restrained here, if not, for many people, downright bearish, but I think for others, at least not a bullion. And I think people always use valuation and get nervous, but frankly, valuation's never been a good indicator of a top. Certainly we're, as I keep saying, we're 43 years into a secular bull market at all-time highs or very near all-time highs. We've been very strong since October 2022, more than doubling off of that. So it's, it's understandable that valuations are higher, and with what's going on in AI, that certainly has lifted things. But if you look below that and look at a lot of other stocks, there's plenty of areas in the market that are not overvalued at all. And frankly, as I said, valuation is not a good indicator of a top anyway. So even the things that may seem a bit up on stilts. Even they look like they can go a lot higher. So it's been a tremendous run this year. The miners have finally started to catch up to the metals. Gold's done very well, as we know. It's has been up to 4,400, I think. And silver, which had lagged, has done a lot of catch up in the last several months. We've gone through a correction here. You got a lot of people calling for lower prices on gold and silver, lower prices on the metals. My look at it is that we are at that inflection point here too. I think as of yesterday, today, you may have bottomed out in the miners, and I think there's a big run ahead. I think the biggest part of the run in the miners is ahead. As big as some of those have doubled and tripled off their bottom, some more than that. And yet I still think the biggest move is ahead of us, and ahead of us in the next 6 months. It's not, 2 years ahead, 3 years ahead. They will get hit in a global bust, which is what I'm expecting after this, sometime next year. But before that, there's big upside in the miners. My target on gold, was 5,000. That's where but I think that may prove conservative. I raised my target back in early October in my fourth quarter letter on silver. I raised that to $100 from 75. And I'm pretty confident we're going to see that in the next, several months. So there's basically silver took a while to get to new highs, but it's finally at all-time highs, as well as gold. And I think now there's clear sailing for both of them. So just to kind of clarify, I am looking for a top in a 43-year secular bull market. So this is what would be categorized as a very major top. And one that will probably stand for decades. So the highs in this stock market I'm calling for, which I kind of glossed over, but I'm calling for 9,500 now for the S&P. I think last time we talked, I was down at 8,700. So I've raised that in my fourth quarter letter to 9,500. That's a long way from here. It's 40%, probably from here, basically. And the NASDAQ I raised to 32,000. The Russell I raised to 3,800. And the Dow I raised to 65,000. So all of them have basically 40% plus returns from here to go. With that in mind, it's not a top yet, and even though it can come very fast in this final stage, you don't want to get nervous yet and jump out. But on the other hand, time-wise, we could be at a top as early as sometime in the first quarter. And so you do have to start looking. And what I will say is that we're not seeing the signs here yet, but what I would be looking for is sentiment to be all in. Once you have, as I said, people are pretty cautious right now, and every time we get a little sell-off, they get nervous. Once you have everybody convinced, we got the Fed at our back, the Fed's getting more aggressive and easing. It means the cycle has a long ways to go. It could last for a couple more years. Once you start hearing that rhetoric, that's the beginning of the end. It's not the end, but it's the beginning of having to start say, how long can this run? I don't think it has 2 years to run. I think it has months to run. I may be wrong. It may get stretched out again. Every market cycle has different leadership. This one was led by tech. To some extent, healthcare earlier in the cycle. The next cycle is going to be much more an inflation-driven cycle, led by the commodities, led by the precious metals. So, you can ride the metals through this, but they're going to get hit too in a bust. In a global bust, most assets are going to get hit. But whereas, say, the stock market might drop 80%, gold might drop 50% or 40%. So it will be a relative performer, but there's still a big hit. So the things that will hold up in the bust will be pretty much treasuries and cash. So it doesn't mean you won't have a cyclical bull market or a money-making opportunity in the indexes. But if you ride it all the way down, that's not going to get you back to even. You're still going to be well below even, I think. Whereas if you're in a more narrow group of stocks that are, let's say, commodities, the next cycle, those could go on to major new highs. So, I'm calling for gold to go to 20,000. I'm calling for silver to go to 500. So even if you rode through the bear and rode through the bust and bought and held, those things you will be fine. You'll just have to deal with the negative period that you won't feel very good that your portfolio's gone down. But so it really makes a big difference what you're owning going into the bust, and then what you're owning on the other side of it. In terms of, but I do want to stress, people hear dire things like 80% and never getting back to those highs or not for decades. That does not mean there's not investment opportunities in the next several years. There's going to be some very big opportunities. It's just going to be in a different manner. You're going to have to kind of adjust to the different kind of a cycle that you're going to be in.
Buckle up. DavidHunter says the greatest wealth transfer in modern history is about to ignite. While the final manic blow-off pushes the S&P toward 9,500 and NASDAQ past 32,000, the real rocket fuel is shifting under the surface into an inflation supercycle that will make the 1970s look tame. Precious metals and miners are quietly positioning as the ultimate beneficiaries of endless liquidity and exploding fiscal deficits. But here's the twist. No one's saying out loud. After the smoke clears, the new inflationary supercycle launches gold toward $20,000 and silver to $500, turning today's crazy targets into tomorrow's conservative footnotes. Position for the final euphoria now, rotate to commodities before the crash, and you won't just survive the greatest wealth transfer in history, you'll own it. If you found this breakdown helpful and want to stay ahead of these historic market moves, make sure to like, subscribe, and turn on notifications so you never miss an update. Your support helps the channel grow and keeps you informed when the markets shift next.